It's that time of the month when we take a look back over my Trading 212 portfolio and see how things are doing. But before we even do that, let's go and have a look and see what the markets have been up to. So we look back over the last month, we have the S&P 500 up a wonderful 9.14%. And then we think that's good. Wait till you see what the Nasdaq was up to, almost 11.5% over the last month. The tech stocks have been rallying, but what about the good old sluggish FTSE 100? It is just clocking in a slight bit of greenness there, being up 1.74% over the month. Welcome back to the channel, and if you're new here, hi, I'm Mark of Desperately Seeking Fi. So let's have a quick look at what's going on in the Trading 212 portfolios. Overall, just under 28,000 invested into the Trading 212 portfolios. We'll have a quick look at the 4 different pies that I have within Trading 212. So I've got a growth and a monthly dividend, which are both individual stocks in those 2 pies. I've then got the 3 ETF pies, the daily DCA, monthly DCA, and Own the World. What we'll see is the monthly DCA is leading at the moment, and the Own the World is actually doing reasonably well. So we have a look at that over the last month. It is up about 2.6%, and within this portfolio, as with the other 2 ETFs, I basically just have these 4 different ETFs. So I've got the S&P 500, so VUSA, I've got VFEM, the emerging markets, FTSE 100, and the FTSE Developed Europe ex UK. That gives me a whole world coverage and basically replicates Vanguard all world ETF. Let's go and have a quick look at the growth portfolio, and at the moment I just have Rolls-Royce in here. I've done a video on Rolls-Royce and that sort of sets out why I have invested into this, but at the moment this is up about 18%. I also hold this within my free trade account from a couple of years ago, where it is up over 200%. So I'm reasonably happy with where I am on Rolls-Royce, and we'll see whether that grows a little bit more. On the monthly dividend, so this is everything in here is looking at paying me a dividend of some description, and it's a mix of stocks and ETFs within this single pie. So last month it was looking at being about 4.24% down, equating to about £850. Currently it is up over £500. Some of that movement will be because I have invested some money into it. So in reality, it has probably had a movement of somewhere between £850, £900 over the last month. Reasonably happy with that, but as we all know, we're investing for the longer term, so it is more about where are we going to be in 10 years time as opposed to where we've moved within the last month. And what this means is, for everything that I actually invest into, I'm getting a little bit less of it because the prices have been going up. Let's go and have a quick look and see how things are looking. So there are 20 different holdings within here. I'm going to do a quick run through them. So Realty Income is my largest single holding of a stock. Over the last month it's gone on a nice bit of a rally, coming up from about $46 per share, and it is now up to just under 54. Nice little run. I'm glad that I have been buying in. You'll see that I have been averaging into this, and average price sort of sat there at about 52.49. That is showing as a down, as a 0.38% loss at the moment. And how does that work? It's all to do with the exchange rate. So it's what I've bought it in at in pounds that it is actually looking at. Because if you were to look at that very simply, you'd go, the current price is above the average price. How does that work out? But this one is paying me every month, and I get a 12th of that 5.68% every single month. and that comes in at about just under £30 per month coming into my account, which I can then reinvest and build that up so that I end up having more than 150 individual shares in Realty Income. Next, we've got the iShares UK Dividend ETF. I've done a video on that if you want to go and have a quick look at it, but I have 280 shares in this. Currently up 2.6%. Looking at British American Tobacco, this one is paying me a nice little dividend of just under 9%. Holding 44 shares in it. It is down about 1% at the moment, but it is something that I will continue to buy into. Then have the VMID, so the FTSE 250. I bought into this when the price was under £28 per share and currently sat up about 2.5%. That pays me a dividend of somewhere in around the 3.5% per year, and that pays me quarterly. Legal and General, once again, up a little bit, just over 1.4%. Nice little average purchase price at 222.6, and this pays a nice dividend of 8.61. Done a couple of videos on this that you can go and have a look at. Then National Grid, 60 shares of this, just over £600 invested into it, and this pays me a dividend of 5.65%. Next is Lloyds Bank, and I remember when this was way more expensive to own than the 42 pence and some change per share, and I am just under what I have as an average price for this, and this one is paying almost 6% dividend yield per year. Primary Health Properties, another one of the REITs that I do hold. I had bought into this at an average of 92 pence, so up quite nicely at just under 10%. As I said, quarterly dividend payer and paying a 6.71% dividend. Rio Tinto, the first of my miners that I hold within this portfolio. It's up nicely over the last period, and I've got a 12.63% return on this at the moment. I'm going to hold on to these because they tend to be relatively cyclical, the miners, and looking at dividend yield of 5.91% at the moment. TRIG, so the Renewable Infrastructure Group, is one of my two ESG kind of holdings that I have within this portfolio. It is currently down a little bit, and it does tend to be a bit of an oscillation stock. It goes up and down quite a bit, but is paying me a nice 6.51% dividend yield. GSK, another nice little quarterly payer, something that I like to have within my portfolio. It is down a little bit over the last month, but still in the green at 3.82% up. And that's paying a dividend just under the 4% mark at 3.94. Taylor Wimpey. Now, I wish I had bought in to Taylor Wimpey when the price was really down. You can see my average price there is just under 107 pence. I had this originally at a couple of hundred shares of it at under £1. This is my stock that is most up at the moment within the portfolio at just under 19.2%, and it is paying a 7.5% dividend yield. I'm going to keep adding to this because I think that Taylor Wimpey, the house builders in general, will start to come out of the slight slump that we've got at the moment, being driven by the interest rate and mortgage rates, and we will just see these starting to take off. Anglo American is up a little bit over the last month, but I'm still in the red at 1.4 down. Looking at a dividend yield of 4.59. That is a little bit lower than Rio Tinto and also quite substantially less than Glencore. Glencore, I think, is something that I may potentially start adding a little bit more to. It is up just under that 1% at the moment, and you can see that over the last month it has sort of oscillated up and down, so I'll just keep an eye on this and look at potentially having a buy price somewhere in around that 425 for this stock. We've got IG coming in, and it's been on a reasonably nice run over the last month. It is in my portfolio up just over that 3%. I'm paying a nice little dividend of the number of the beast 666. Greencoat UK Wind has recently just paid me a dividend. I hold 600 shares of that, and I'm currently up just under 6% on the investment into UKW, and it's paying a nice little dividend in around that 5.89%. DS Smith has had a bit of a bumpy last month at 50 shares in it, one of my smaller holdings, and it pays a dividend of 6.41%. Vodafone, now this is one that just keeps on giving. I'm currently down about 9.3%. I don't think I'll be buying any more into Vodafone. Is that almost 11% dividend yield a bit of a dividend trap? Leave it up to you. I've done a couple of videos where I've talked about Vodafone. They carry an awful lot of debt to rebuild and extend. The infrastructure for the mobile network really is expensive, and do they really want to be drawing down any more debt at this stage? It's a bit of a red flag for me at the moment. ICP is actually the stock within my portfolio that is up the most, and I just wish that I'd bought in a little bit more when I was sort of adding to this holding a couple of months ago. Look at that. Got an average price of £12.84, and it's currently sat at over £15.50, and even at that it's still paying a 5.02% dividend yield. And then last one, and my smallest holding within here, is Sainsbury's, up about 2.4%, and it is paying a dividend yield of 4.11. I might come out of that and then look at reinvesting into some of the other stocks that are either coming up with next dividend in the near future, or that potentially pay me a better and more sustainable dividend yield. Why don't you go and have a look at this video where I talk about some of these stocks and I pitch them against each other. So thanks very much for watching, and I will see you in the next one. Cheers, bye.